Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at our home studio in Times Square, New York City, we have Phil Mackintosh, chief economist at Nasdaq. We're going to discuss why equity strategists are downgrading U.S. stocks and why economists are taking down their GDP forecasts. Phil, it's great to see you as always. Welcome back to our home studio. And let's start with the reasons why, despite some weakness this, to start the week, markets are sitting at all-time highs, U.S. and global.
So the U.S. markets are just off all-time highs, but actually European markets, a lot of other countries in the world are doing really well and starting to catch up. And that's part of what you just talked about. So a lot of the analysts have actually downgraded U.S. stocks in preference to other stocks. We've had a great run with U.S. equities. There's a lot of outperformance versus countries like Europe, which are only just back to all-time highs. We've been doing all-time highs for months. And so really some of this is just a rotation from the experts into other asset classes that can catch back up.
You know, it's so interesting, the markets really haven't responded to the downside, even with the Delta variant. However, U.S. data is showing there is a little bit of downward pressure there. How is the consumer responding?
Yeah, I mean, that's a really good point, isn't it? We've been talking about the COVID cases rising for what feels like months again now. We know that Delta is spreading. We know that it's much more contagious, and yet the markets have still been positive. But we are starting to see some of the data coming through negative. We've started to talk about it. If you look at credit card spending, it's started to fall over. If you look at restaurant bookings, they've started to fall over. Airline bookings, same thing. So you're starting to see in the data some people's consumer reactions and fear of the new Delta coronavirus. And you're starting to see that as well if you look at consumer confidence. So there's consumer confidence stats that came out last week, by one measure back to almost decade lows. So the consumer is starting to get worried about Delta now.
Right, and to no one's surprise, because of the Delta variant, we're seeing it reflected in the jobs data as well. That said, why is unemployment so low, and do you think that the workforce will return now that unemployment benefits have run out?
So you almost answered your own question. The unemployment rate's 5.2%, but part of the reason is the participation rate's fallen. A lot of people have said, I'm not looking for a job right now, and so it makes the unemployment rate look artificially good. There's millions of people that have left the labour force. Some have retired, so they probably won't come back. Some of them are just worried about going to work in service industries, especially with coronavirus around, and others, with all of the stimulus money, have said, I'm not coming back unless my pay goes up. One of the things that's happened this week is all of those stimulus benefits have stopped. And so it'll be interesting to see what happens in the next few weeks, whether with schools going back, hopefully Delta are starting to get under control because there is a sign that it's plateauing. And with the stimulus checks winding back down, whether people will come back to the workforce. Extra supply should be good for wages as well, because we've started to see some wage pressure with all of the jobs out there and not enough people coming into the workforce.
And as we mentioned, the big banks, your Goldman Stanleys, your Credit Suisses, Morgan Stanley, your Goldman Sachs, sorry about that, they've taken down their estimates with U.S. stocks and GDP forecasts.
Yeah, and not just the banks with their U.S. stock estimates, GDP forecasts of economists have started to fall as well. So I think the economists were probably ahead of the curve in terms of the market wasn't looking at COVID, but the economists were, and they've started to say that looking at Q3, looking at Q4 GDP numbers, probably not as rosy as we thought a few months ago.
All right, Phil, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.